I'm Brigid Taylor and this is Currency Wars. This week the rand has been relatively contained amidst very little local data and mixed US releases. The dollar weakened against its major peers, and after softer than expected US first quarter GDP, the release marked a third revision of the GDP and yielded an annualized contraction of 2.9%. This was worse than what was expected, and mainly due to weather and healthcare revisions. We've also seen more forward-looking indicators, including the PMI, reveal a much more optimistic trajectory in the US. This is encouraging for markets in the knowledge that the Fed rate tightening remains far off, regardless. News of the platinum strikers finally returning to work has lessened one of the fear factors inherent in the local currency. However, an end to the strike cannot be solely relied upon to boost South Africa from its first quarter slump, when the retail sector continues to suffer from weak demand and households are burdened by high inflation and unemployment. South Africa's Finance Minister Nene, in comments made this week, stated the platinum sector strike would have significant effects on the government's budget balance. And the South African Reserve Bank Deputy Central Bank Governor, Daniel Manele, stated that interest rates would need to rise to curb uncomfortably high inflation. Manele also added that inflation risks remain tilted to the upside, and while interest rates needed to normalise in due course, he also alluded to the hike cycle being shallower than in previous cycles. Now that we've seen the lay of the land, I'd like to welcome my guests, Cilliers, Director and Manager at TreasuryOne, and Michael Keenan, FX and Rate Strategist at Barclays Africa. Welcome. Thank you very much this evening, and let's open the discussion around where we stand post all the data that we saw, the S&P downgrade, etc. We've kind of had a week where we could reconsolidate and just have a look at where South Africa sits amidst all the emerging markets and obviously from a global perspective. Mike, do you want to start off and just talk to us about the risks that you still see with regards to the markets?
Look, I still think that South Africa's fundamentals remain pretty weak, but we have entered into kind of the Northern Hemisphere summer period. So, like you say, I mean, trading conditions are going to probably be rather quiet. People have probably absorbed a lot of the information that's come through. But going forward, I still believe that the key for the rand direction will rest heavily on the actions of the Federal Reserve in the US and their language and the upcoming data out of the States over the coming sort of months and quarters. And
then we have our own MPC. So it still does largely, it is about the central bank decisions. We saw what happened with the ECB. They took an opposite side stance. We've seen the Federal Reserve continuing. However, the data that's come out of the US has been relatively positive. And I mean, the sentiment that's coming out of the US in terms of their growth trajectory, despite the GDP revision, is still positive, right? So what is your view in terms of where we sit as a developed, the developed market and the emerging markets?
Well, I think, as you correctly say, that the figures out of the Americas is turning positive, and it's continuously turning positive, and I think that will continue. I think that might just sort of slowly spill over into Europe, and I still have this sort of global economy that's around thing, that eventually the Chinese will also grow from that, and that will spill over into demand from commodities and so forth out of Africa. So we'll also get our share of the growth. So over a period of time, yes, I think we'll be okay and we'll be sort of coming out of the doldrums, but it's not a quick and easy one.
Well, this is the thing, and I think that's the kind of the conundrum. In South Africa, from my perspective, we've got this global growth that still remains relatively benign. Yes, you're right, we're seeing some form of developed market growth. However, because of that poses a risk in terms of upside trajectory on the rand, because if the dollar starts to come online again, and there is talk that potentially the Federal Reserve does look to hike interest rates, that does pose quite a significant risk in my view. So what do you think, just with regards to, for the remainder of this year, what are the key indicators that we really need to look for?
Well, I mean, like you say, it's a kind of a two-speed global recovery. So we've got the US, which is doing quite nicely, and that's creating a strong dollar environment. But then you've got China, which is coming on stream slowly but surely.
But they've been quite bullish, comments that have come out of China, but then you've got to take it with a pinch of salt.
Exactly.
Right?
I mean, I think there's still some potential for that economy to be a little bit soggy compared to what we've seen in the past, and then we'll start seeing the improvements coming through. So that, for me, is quite negative from a commodity price perspective, because you've got a stronger dollar environment, I agree with that, and then you've probably got fairly subdued demand out of China. So I'd be looking at commodity prices. I'd be looking again at the Fed kind of language and the data, and then also these geopolitical tensions. I think we've got to keep a close eye on Ukraine and Iraq.
Exactly, and those are teetering in the background. Let's bring it back home, Andre, and let's talk about, we've had the mining strike action finally looks like it's resolved. However, we've got that lag. We saw that number in GDP specifically. We've had these talks this week. We had Mr. Maneli talking about the concerns around the growth trajectory in South Africa. We've had, Finance Minister Nene also talking about the similar sort of things. What do you think in terms of the South African backdrop? Now that we've had the ratings agencies downgrade, we've got Eskom on watch in terms of cutting power, etc. What do you think those are likely to do in South Africa in terms of the fundamental underlying, structural issues?
Okay. The strike is over.
Yeah.
And one of the problems is that the negative figures of the impact of the strike is still going to come through. So we might still be in for quite a bit of a rocky patch over the next 2-3 months, because in the beginning of the strike, the figures that came out was relying on stockpiles that was there. So it wasn't that negatively influenced. That ran out, and now that the strike is over, those really negative figures might still hit us quite badly.
Yeah, and then we're going to have the capacity constraints from Eskom as well, right?
Exactly.
So this is a double whammy in terms of the fact, yes, it's come back online. Yes, we've got to, the production's got to have to play catch up. However, we're going to have this constraint because we're in a winter period.
But I think what also needs to be looked at is very carefully over the next couple of months now is the voices that come from governments after the downgrade, so that we can see what's their reaction to that, what do they do about it, and coming up to the midterm budget in October, that will be really, really important. But up to then, I think that we will be in quite a stable period.
And what do you feel about the NDP? So we've had that paper come out. There's been a lot of two-way thought around that. Is it strong enough? Does it have the legs in order to get the South African economy back online? What is your view around the NDP?
I think it's strong enough. I think what might not be strong enough is the actual implementation of
delivery of it.
So delivery of it, it might be a problem. But what it says in the plan and what's the status of the plan, that's good. But how well will it be implemented? That's a different story.
Okay, so the rand's sitting within this band at the moment. We're sitting sort of between 1060, 1080. It hasn't really done anything significant in the last week. However, we are going into July and we're looking at the MPC. We had Mr. Maneli talking this week. Interesting from a perspective of inflation. So the South African economy, slow growth, higher inflation, obviously one of the big risks being the rand. What is your view around investors from offshore still looking at South Africa as an opportunity for the carry trade?
I think so. I think there's kind of a blind hunt out there for yield, because the Federal Reserve has kind of given us a green light that they're going to keep rates steady for the foreseeable future. As a house, we believe that they'll only probably start hiking interest rates in the US midway through 2015. Of course, the markets will move before that actual eventual hike. Probably when we start seeing the language becoming a little bit more hawkish, we'll start to see a reaction. But yes, I think the rand, together with a lot of other sort of high-yielding currencies, will benefit so long as the Fed is going to keep conditions fairly accommodative. So investors will probably look through some of these fundamentals. I think, another aspect of the strikes and the NDP, the lack of implementation, and the electricity points that you mentioned, it all comes down into the sentiment bowl, because at the end of the day, we've done ourselves no favours in the international community, and these are kind of, as the Governor Markness mentioned, were self-inflicted. And we know that sentiment is a key driver of currencies.
I agree. So, going forward, I mean, if we look at the rand in terms of the trajectory that we're looking for going forward, if you're a foreign investor and you wanted to put your money in South Africa, yes, you're getting the positive carry. However, if they've got that upside trajectory on the rand, that erodes that carry trade opportunity. So what is your view in terms of the sentiment from an offshore investor in South Africa according to our peers, if we look across the other emerging markets?
I think we're going to be in a very stable period. So I think, and I want to come back to this real interest rates, inflation rate, etc. If I'm a foreign investor that's going to put my money and I want to earn a proper yield on it, I'm not too concerned about the inflation rate in South Africa, because I'm going to take my yield and I'm going to take my money and leave. I'm not going to actually spend it.
Right? That's the only problem.
The problem is only if the rand weakens. So I would look at what's the possibility of a stable rand rather than what's the possibility of inflation being on the increase.
And you're of the view that we're going to see the rand pretty stable? I
think we're going to be in a fairly stable band. What I'm advising and saying to my clients is that we will be moving in a 1040, 1065 band for 50 to 60% of the next 3 months, with only a 30% chance of breaking out of that. But that I would regard as a spike, and I would expect it to come back within that band.
Okay, so that's quite an interesting outlook. Right, now that we know where we stand in the real risks and opportunities, Mike, I'm going to ask you to lead. What is your view in terms of where investors should be looking for the rand and possibly the cross currencies to trade in the next week?
Over the next week, I think it's going to be pretty dull up until non-farm payrolls. We are expecting a stronger than consensus print, so I think the risks are to the upside. I think we could, over the next week, very well visit that sort of 1085 highs that we saw previously, maybe even push on to 11 if you have payrolls coming out stronger than expected and we get more the geopolitical tensions in Ukraine and or Iraq intensify further. I think I would be still looking to buy any dips if they come through. Okay, that's a fair comment. Andre, your views for the following week?
Okay, for the next week, I would expect the rand to trade in a range between 1055 and 1068 and favouring the upside.
Okay, that's interesting. So just to round off, strategy for the week ahead, Michael thinks buy the dips, possibly looking for a break above the 1085. Andre's looking for a pretty benign rand trading between sort of 1055 and 1068. So overall, the trajectory still remains to the top side. However, we are looking for rand to remain around those middle to more weaker levels in terms of the range that we've seen recently. For any comments or questions, you are more than welcome to contact us at CNBC Africa, #CurrencyWars410, or you can contact myself, Brigid R. Taylor, for your personal responses to the FX markets. Until next week, good luck in the trenches.